So not much of a loss. The second thing, the re-rating effect. If your sector gets a new hype, or the retail subsidiary in your manufacturing company gets a revenue multiple. Catalyst investing. When Nifty was at all-time high, but few of my favorite stocks were at lower valuation, the question arose, should I invest or not? The basic definition of a bear market is when a company is at valuation less than 20% of its all-time high. So when the index is at all-time high, there might be stocks in my watch list that could be in a bear market. With this, I want to make it clear, I think every company has its own bear market. So finding these well-researched companies at all-time low in a bear trap is quite possible, especially when your favorite Nifty 50 is at all-time high. Then the question arises, should you invest or not? See, every ace investor has said that bear market is best time to find valuable opportunities and turn them into multi-baggers. So, why to miss the opportunity when you get it? But a bear market is not enough. What other characteristic does this stock have? We have to find those characteristics. See, the company as well as the industry certainly should have some kind of a future. The valuation when comparing to Nifty 50 index must be cheaper. And how so? See, currently Nifty 50 is trailing at 22 times its earning. So, if you are buying a company that is trailing at price to earning multiple of 50, then expecting a value unlocking at that high valuation is insanely optimistic approach. We don't have to be too optimistic. So when your company has some hidden gem and is currently trailing below 17 P, mind you, Nifty is at 22 P, then with certain unlocking, your company's valuation might go up and you will get the safety of Nifty 50, which is certainly a 22 PE multiple. You are buying below Nifty 50 multiple. This unlocking of value at a later date might return to us as margin of safety. When you have not paid much at the first step, then you get two things from valuation matrix. First is growth in the company profits might make your market cap rise up or at least stay the same with increased dividends. So not much of a loss. The second thing, the re-rating effect. If your sector gets a new hype or the retail subsidiary in your manufacturing company gets a revenue multiple of its revenue, the re-rating will jump from sub double digit multiple to even triple digit, even 100 or 100 plus PE. This makes a stock multi-bagger, 10x returns. So we can emphasize that presence of catalyst gives out crutches like support in a bear market for the investor to stand on when the index itself corrects almost 20% in 2 to 3 years. A catalyst is some kind of a value unlocking mechanism that is hidden within the company itself and can give your investor some kind of a boost at a later stage, maybe next 2 to 3 years. This is some kind of a hidden gem ignored by the general market at that point in time that is busy chasing the tail for the next big thing. You don't have to chase the big thing. There are two kinds of catalyst, external catalyst and internal catalyst. Let's talk about external. Something outside of the company that is going to build up the demand or opportunity for the industry to grow. For example, see, GDP addition of $1 trillion in the Indian economy will add up to spending in luxury segment. So GDP addition with population growth momentum would indeed boost up the demand for housing as per capita income increases, leading up to rise in home improvement space. Hence, a silver dollar would be gained by construction, luxury, home improvement retailers. That's why we are seeing these retailers at more than 30, 40, even 50 PEs. Internal catalyst. What are those? See, unlocking of a business from within, new IPO coming soon. We also see these things. Or detachment of a subsidiary to get individual attention after unlocking. For example, sometimes whole business is doing a revenue generation of 5,000 crore, but the market cap of the company is valued at 1,000 crores. But once the marketplace subsidiary, the retailer, detaches from the manufacturing company, that marketplace business itself will get sometimes valued at the revenue times multiple. So once the company gets valued at revenue times multiple, the internal and external catalyst helps a lot when the liquidity in market suddenly dries up and the index starts to correct. See, we are talking about the long-term investor gets a backing from catalyst, that even if the correction sustains, the catalyst will be present there, leading to value unlocking and sudden boost in stock price when the situation actually comes. See, we are talking about investing in an all-time highs market. So we have to find an opportunity to be able to know the catalysts in our own companies. Let's see how many catalysts we are able to find so that we can invest hopefully in these all-time highs markets. Thank you for watching. Please like and subscribe. Thank you.